I think, to your point, we're facing this issue where we're watching what Europe's doing. Today, people seem to be a little disappointed with going just down 10 basis points as opposed to more. And the question is that actually going to stimulate enough? And now that we sit here and we're maybe about to do the same thing next week, UBS is calling for 5 quarter-point basis cuts between now and the end of 2020.
Jeez.
We're now talking about a 50-year bond.
Is that because you see a recession coming? Or?
So I think, and this was alluded to in the last segment, I think that it's not that we see a recession coming. And I think there's pretty widespread agreement. You're talking about some of the wage growth that we're seeing, the power of the consumer. We're at market highs. Companies can borrow. Individuals are refinancing homes in record numbers. But I think there is this narrative that the question is it the chicken or the egg? Is it the Fed going to take rates lower in order to prevent a recession that is largely seemingly being caused by uncertainty around trade rhetoric, around production, around global imbalances? Yeah. And so all of this is sort of woven together. But we have a really strong consumer.
Yeah, no, so the trade issue, before we go, is an important one, Brian. If people say, look, what happens with rates is going to hinge on that. Whether this value rotation continues is going to hinge on that. Who knows the outcome? I mean, that's a tough one for market participants to have to call.
Absolutely. And I kind of look at the whole market now. People worry about recession. The conditions are favorable, right? We still have an inverted curve, 3 months to 10s, even after this backup. But it's still going to take a spark, I think. What's the spark that's going to actually start to spiral consumer confidence
downward?
The other direction? Yeah. Maybe it'll happen, maybe it won't. I don't think it's a foregone conclusion, and I think that's what the market's struggling with.
Last word,
Brian, I just want to ask a very quick question here. Yeah. My reporting was that we had people had to get to the other side of the trade when rates fell. Are we now going to see a snapback that could go to the other side, to the extreme? Could we go back to 2% on the 10-year as we try to unwind that trade, which was too far to the downside?
I think the potential is there to maybe get as high as 2%. But I'd be buying duration at that point.